Good afternoon, my dear students. For you only, I am recording this video. The company final account chapter we do have in SY syllabus, and this is also called as the preparation of the financial statement of a company. In this chapter, what we're going to learn, I have shown you in the PPT. In the regular lectures, I have taken so many theory lectures. There in detailed manner we have learned everything, but some students are saying that because we could not attend the lecture, for them specifically I am preparing this video, and this video also can serve the purpose of revision. By watching this 1.5 hour video, we'll try to you will understand definitely all the concepts related to financial statement briefly. Correct. Now in this chapter, my dear students, we will focus on the meaning part of a company and then maintenance books of accounts of the company. Why we have to maintain, is there a legal provision behind this, etc. and etc. Then after studying this theory, we will try to understand how to prepare financial statements of the company. Financial statement, for that what it mean by that you must understand. If you don't know how you can prepare, you cannot. Therefore we will try to understand in a detailed manner what is the financial statement. Then we will understand the period of financial statement. Then after understanding, we will try to understand the format of schedule 3. In that also you will find the division 1 and division 2, but in our syllabus we will find only division 2, and for that we will prepare part 1, part 2 and notes to accounts, etc. What are they? We will study later on. Just I am briefly pointing out the points which we are going to learn in this chapter. Then we will try to understand the difference between current and non-current, when we can say a particular item as a non-current or the current. The criteria is specified in Companies Act, that we will try to understand. Then so many provisions we will find related to depreciation, how to record the depreciation under section 123(2), and then selected adjustment related to depreciation we will see. After studying that, we will try to understand the accounting for taxes on income. For that we have separate accounting standards under number 22, but here, yes, in a brief manner we will try to understand related thing to the company final account. Then we will understand the dividend distribution tax, dividend procedure in declaring dividend, what it mean by interim dividend, proposed dividend, and then how to show, where to show that. Correct. Related to this we have AS4 related to final dividend disclosure, and then in a dividend you will find stages. First director proposes that, and then after that shareholder approves that or give their consent in a general meeting, and then that becomes the final dividend. And in accounting also so many stages. That amount you require to transfer to special bank, if not distributed then to education fund account, and from that also, yes, their interest and all, yeah, to investor education fund account. Correct. Within 7 years, if that is unutilized, then we do transfer there. Then you will going to learn here transport to reserve adjustment. Yes, some profit we set aside for emergencies, how to transfer, then which effect we should give in schedule 3, everything in detailed manner we will learn in a transport to reserve. Then after this we will try to understand declaration and payment of, yes, that is same. Okay, and then flow is like this. Here we have flow, meaning, then preparation, then current, non-current. Here something like arrow things we will find. What it mean by after depreciation, we will try to understand that divisible profit, divisible distributable profit. Correct. Some profits, some reserves you cannot distribute, those are the undivisible or undistributable profit. The difference between these two we will try to understand, and which are the divisible profits, that we will try to understand here. Then declaration and payment, transfer to reserve, dividend distribution, and accounting for taxes on income. This much is there in our SY syllabus. This is just the overview of whole chapter. After this, to understand it in a better manner, we will focus on the title of the chapter. In a title, you will find company final account or the preparation of financial statements of a company. Company word is there. Therefore, you must understand what it means by company. Without understanding company's meaning, you cannot figure out which balance sheet to prepare, and then whether this is the company's balance sheet or not, company's trial balance or not. If not, then why to apply the Schedule 3 and Companies Act 2013. Therefore, basically, first you must understand to which organization you should call as a company. Now, definition is given, same definition you can find in law book and other books. This here I have categorically bifurcated that into three parts. First, you can call a organization as a company if that is registered under Companies Act 2013. If you get the registration under Companies Act 2000, then your organization is called as the company. Then, my dear students, if not, your organization should be registered under any previous act or the Companies Act under 1956. If this is so also, then your organization is called as a company. Or some different types of companies, correct, defined under Companies Act 2013. This is a banking company, insurance companies and all. They are the some statutory bodies. For that also we are going to apply these accounting provisions. This is the Schedule 3 and all provisions, correct. Then we have next here maintenance of books of accounts. To which type of companies books of accounts are mandatory and under which section that is mandatory, that we will see. My dear students, that is mandatory as per section 128 of Companies Act 2013. You will say that why, sir, you required to prepare a balance sheet in a certain format only. Why not our individual balance sheet? We are preparing, we are writing the liabilities on the debit side or left hand side, then assets on the right hand side, horizontal format. Why not that format? Correct. Because in a Companies Act 2013 under one section 128, they are saying every company should prepare and keep the books of accounts at its register office. Yes, and some relevant financial statements also on the accrual basis with the double entry system for every financial year, and we should give true and fair view. And in that act only, in Companies Act, they have said that prepare the financial statements, yes, as per Schedule 3. Therefore, we have to follow the format. We cannot prepare now profit and loss and balance sheet as per our own whims and wills. Understood? Then, my dear students, while preparing financial statement or before preparing financial statement, you must understand what is financial statement and then what is that financial year mean by, correct, meaning of this financial year. Financial statement means, the inclusive definition you will find in your book also. What it means? It includes the statement which includes 5 things. First, what? The balance sheet, then profit and loss, then cash flow statement, then statement of change in equity and notes relevant to all of above. If a statement which includes these 5, then that statement is called as, or that statement is called as the financial statements of the company. Here they are saying and then financial. Understood what financial statement? Financial statement means generally 5 things. It also includes some statutory things. That means those things which are compulsory by some other act, some statutory requirement, correct? Now, CB requirement or some other because of some other laws requirement, we create those statements under financial statements. Which are they? Like board of director report, their responsibility statement, auditor statement, then segmental report, etc. and etc. And in financial statements you will also find voluntary things. Which are they? Like environmental report, human resource accounting report, etc. This is actually mean by the financial statement. Then after understanding financial statement, you must understand the period of financial statement. What is the period of financial statement? Period of financial statement means the period which starts on 1st April and ends on 31st December. Correct. This is the period of a financial year, we can say. But we have exception to that also. Can it be more than 12 months? Yes, it can be more than 12 months. Then can it be more than 15 months also? No, it cannot be more than 15 months. That means minimum 3 months and maximum 15 months financial statement you can prepare. That means you can prepare financial statement in between 3 to 15 months, not minimum 3. Less than 3 months financial statement is not possible. Okay, why this is so? Because Companies Act is saying if you are starting company from 1st Jan, then don't prepare financial statement up to 31st March period. Then what to do? When to prepare that period's financial statement? In the next year you can prepare that. That means our period here in this case starts on the 1st Jan of let's say 21, but on 31st March of 22 we will not going to prepare financial statement. Then when we will going to prepare that? On the 31st March of 2023 we will prepare. Therefore 1st Jan 21 to 31st March 23, that becomes the 15 months. 15 month statement. This is possible. Correct. Then what about when we start company before 1st Jan? If you start the company before 1st Jan, then you can prepare statement from your date to 31st March. Suppose if you start on 1/4, then obviously you can prepare at up to 31st 3. If you start on a 1st say November, you can prepare up to 31st 3. You have to prepare up to 31st 3. That means what? Here in this case you will find financial statements for 3 plus 2 5 months. Okay. That is possible. This is the financial year. Okay, this is the financial, so it includes these things. As per section 240 you will find that. Then what are the requirements, prerequisites of financial statements? When can you prepare financial statement? You can prepare financial statement after knowing schedule 3. If you don't know the schedule 3, how can you prepare? You cannot prepare. Therefore you must know the schedule 3 of Companies Act 2013. Then my dear students, you must know the provision given in the accounting standards. Without knowing them you cannot. Similarly, you must know the provisions of guidance note, then some other statutory requirements, etc. If you have this prerequisite knowledge, then only you can prepare, otherwise you cannot prepare correctly 100%. Then what is there in schedule 3? In a schedule 3 we have part 1 and part 2. Part 1 is talking about the balance sheet and part 2 is talking about the profit and loss. Generally we prepare first profit and loss and then after that balance sheet, but in this schedule 3 we have first balance sheet and then profit and loss. One and the same thing, but to show something differently, they have shown here balance sheet first and then after that the profit and loss. Right. Name also changed. Balance sheet, for balance sheet we say balance sheet. But what about the profit and loss? Previously we are saying this as a profit and loss account, but here you will find not account but a statement of a profit and loss. Understood? This is the change. Then our schedule 3, detail format. Now detail format look like this. Now in a detail format you will find so many items, sub-atoms, categories, subcategories, etc. If you count, then you will find near around 30 or Yes, 30 to 35 we can say, categories, subcategories and categories. How to remember all? Without drawing format you cannot solve the problem. You have to remember this. Do you have any shortcut to remember this? Yes, we have shortcut to remember this. Okay, what is that shortcut? Just to remember this, first we'll try to understand profit and loss and then balance sheet. In a profit and loss, how can you remember the profit? You cannot draw the horizontal profit and loss. Vertical profit and loss only allowed in schedule 3. Correct. Here in a schedule 3, to remember this, you can remember as like A B C D. A B C, then leave some space, D E F and then O. Everyone knows the ABCD. We will say that what is therein to remember. We know the thing. My dear students, here how you can remember? Now some small change is there. If you say small child to repeat the ABCD, then he says generally like this, A B C, then he forgets. Then we say parat parat, now say it again. Then he say A B C D E F, and then finally up to this only because he is the child, and there we will say finish. Now finally other, after F all other letter. Correct na? Other. Then how? A B C, now we said him to say it again, therefore we will say parat, for parat P C, and then he will come to know about the flow. After C he will say now D E F and finally O. In schedule 3 we will find D after F here, but just for remembering sake we will say C and then after that D E F and finally O. From every letter you will find some atom name. Now two major categories here in this format. These are two major categories, and after this you will find all subcategories. These are all subcategories. From A major category you will get the revenue category, and from B you will get another major category, that is expenses category. Correct. Then in B, these are two major categories. In B you will find this flow C P C D E F and finally O. From C you will find here cost of material consumed. From C you will find cost of material consumed. From P, next P you will find purchase of a stock in trade. Then from this C you will find change in inventories. Then from D depreciation. From E employee benefit. From F finance cost. Then from O other expenses. Easy to remember. Just A B C P C D E F and F there, finish. O finally other. And if you deduct B from A, then you will get A minus B. You will get what? You will get profit before tax here. Profit before tax. Profit before tax will say. Correct. And from this if you deduct tax, then you will get profit after tax. In between, in the main format in the schedule 3 you will find what? Profit before contingencies. Correct. And then profit before discontinuing operation. Okay. But we will make the format simple for you. At SY stage you will never get the continuing operation items, then extraordinary items, etc. Therefore here profit before tax, less tax and profit after tax, like this we will remember. But in actual schedule 3 you will find profit before the discontinuing operation, and then some extraordinary items, then less extraordinary items, profit after extraordinary items, and then discontinuing operation, then discontinuing operation item, and then after that we will find profit before tax, and then profit, and then less tax, and then profit after tax, like this. But here we will make it simple, we will keep this as it is. Understood? Now this is all about the profit and loss format. Easy to remember, A, B, C, D only. In after C we will repeat, we will say Parat C, C twice, in between P we will write, and then after that D, E, F and O. Simple to remember. And what to write where, or what to write in which category, that we will understand while studying format in a detailed manner. Then we have here balance sheet. For balance sheet we have here part 1. In balance sheet also so many items are given. Remembering that is difficult. To remember, just to remember, for remembering sake, we will divide balance sheet into 2 parts. The horizontal balance sheet, correct. We will say on each side 3 main categories, like this. Just to remember, we will bifurcate all the items into 3 categories, 1, 2, 3. 1, 2, 3 on the liability side and 1, 2, 3 on the asset side. Correct. Any difficulty? This is the balance sheet, 2 sides, and on every side 3, 3. 3 on the liability, 3 on the assets. Correct. Then the first item, first main item of the balance sheet, what should be that? Here in the balance sheet we bring money in a form of what? Equity shares. We invest money. We first bring money and then we invest that money here in fixed assets. Correct. Correct. Therefore your first item here must be related to equity shareholders. Okay. First item to shareholders, equity shareholders. We can say for this as a shareholder fund. Understood? And if we invest this shareholder fund here in the fixed assets. For fixed asset, we will say this as a fixed asset, first category of fixed asset. This come under the non-current, but just to remember we will say fixed asset. Understood? Equity shareholders fund, and here in fixed assets. Then second category here, non-current category. Non-current, yes, here also non-current category. Then what is the difference between here non-current liabilities? Just we will say non-current assets, same. Then after that you will find current category. Here what? Current liabilities, here current assets. Current, same. Understood? Very simple. First what? We bring the money in a form of what? Equity shares. That means related to equity share we have equity shareholder category. You invest that in a fixed asset, therefore on the asset side you will find fixed asset. Secondly, non-current, here on the liability side non-current liabilities, on the asset side non-current assets. Then current liabilities on the current liability side, and then current assets on the asset side. Understood? Simple. Now in every main category you will find subcategories. How to remember those? In every to just remember what we'll say, in every main category 4 subcategories. How many? 4 subcategories. Everywhere is 4. Here also 4 except last one. How many there? We'll say 6 there. 6 are there. Understand? Then which 4? For that I will tell you story. Which 4? Here in equity share, in this equity share category, main category, you will find related to shareholder what first? The very famous item related to shareholder, that is what? Equity shares. equity shares, we'll say. Correct. Then another atom which is very much related to equity shareholder, that is what? We invest money for getting profit. Correct. That profit we will going to show here in this category, because this category is related to shareholder. Related to shareholder, you will find obviously first share capital, and after that the second thing which is very much related to shareholder, that is what? Reserve and surplus. That we will going to show here, reserve and surplus. Yes, what in reserve and surplus, that we will see later on, but here reserve and surplus. And if you take out the reserve money without asking, if you take out the profit, if you take away the profit from the company, then what? Will say that you are the fraudulent person, you are the thief, and then you have taken out the profit. By doing some fraud, you have taken out the profit. We are just designing the story. Yes, like this you can remember. And if you do so, then you will get what? Warrant. Warrant. Third atom is what? Warrant money. And then fourth atom, what is that? We will say that no sir, I am not the fraudulent person, this warrant is wrong. Then court will say, then give the application, and then next you will say application. Okay, next you will find application money. Then after this, the next category, next main category, non-current category. In non-current category, under non-current liabilities, 4 subatoms that I have already said you. The which 4 subatoms, that we'll see right now. For remembering those 4 subatoms, we'll again frame one sentence. You are the students, that means you must not be earning any income. Correct. Therefore, what we'll see? Borrowing. If you are not earning income, you will not get the loan. That means what? You are not paying taxes also. Therefore, say like this: borrowing tax is others' provision. This is not your work. This is not related to you. This is others' provision. By those 4 words, borrowing tax, others' provision, you can frame 4 atoms. From borrowing, if you are writing borrowing in a non-current means, in other word, long term borrowings. From borrowings of the non-current, you can say long term borrowings. Borrowing tax, from borrowing, long term borrowing of the non-current. Correct ना? Non-current मध्ये लिहितोय म्हणून त्याला non-current, instead of saying that non-current, we will say easily that as a long term borrowing. Then from tax, you will find deferred tax liability. If you are writing tax in the balance sheet, then obviously that must be the deferred tax. That is the deferred tax. The deferred tax we do write in balance sheet. Therefore, if you are writing tax, then obviously you come to know that this should be this could be the deferred tax. Therefore, for tax we will say deferred tax. If you are writing that deferred tax, say that as a deferred tax liability. If you are writing that on the asset side, say that as a deferred tax asset. Okay, we are writing that on the liability. Therefore, I have said for tax, deferred tax liability. Then borrowing tax, other. From other, we are writing that other in which category? In non-current. That means in a long-term category. Therefore, say that as a other long-term liabilities. Other, yes, this word you know. From non-current word, you will get what? Long-term word, and you are writing other long-term on the liability side. Therefore, liabilities, other long-term liabilities. Like this you can remember. And then provision, where we are writing provision, borrowing tax, others provision. From provision, you can write long-term provision, because we are writing same provision in what? In non-current liabilities. Non-current means long-term. Therefore, long-term provisions. If you are able to write these 4 subcategories, then definitely you will going to write easily, without any mistake, these 4 subcategories of current liabilities. They are very easy. Now, in a current liability also you will find borrowing, you will find instead of a tax T of a tax, then other, and then provision. Same 4 items are there except one small change, there tax, here trade. TT will remain same, correct, and sequence also same. There if you are writing long term, then here only just one care, because we are writing that in a current, therefore we will write here yes short term. This their long term, here short term. Then their tax, here trade payable. Then other as it is, other their long term, here you can write short term or short term, other short term liabilities, and then short term provisions. Understood? It's very simple. Then these 4 items we have written, these 4 also written. That means till now we have understood 4, 4, 4, 12 items easily. First 4 share capital, and related to share capital reserve and surplus, this belongs to shareholder, therefore we have written that in a share holder category, main category, their capital as well as reserve and surplus. If you take that for your personal gain, if you you are not the theft of money, but assume that, and assume that you have taken that, and then because of that you will get the warrant, share warrant money, and finally share application, money received against share warrant, and then next what, share application money, correct, pending for allotment, that you know. And then what about the assets? We have invested that in the asset. On the asset side also, you will find here a story. First, in a fixed asset, how to remember? 2 are ready and 2 are in a still progress. In Marathi it's very simple. दोन बनलेले, दोन बनत असलेले. Then here 2 are ready. In that you will find what? Tangible assets, they are ready. Then intangible assets, they are also ready. Then in progress, tangible asset in progress, that is called as WIP, work in progress. And then fourth one, intangible under development, intangible under development. थोडीशी खिचडी झाल्या टाइप झाली आहे, पण you will understand, intangible under development. Then after this, next 4. On the liability side we have written 4. From non-current liability of these 4 we will going to write, just remember one sentence, and then first category, equity shareholder and fixed asset category, no need to remember other categories, correct, because opposite to non-current liability we have non-current assets. We have what? Non-current assets. If you have written here long-term borrowings, then ask yourself what is the opposite word for borrowing. That we will going to write on the asset side. Asset side under non-current assets category, opposite to borrowing, you will find borrowing means money taken from bank. If you give money to bank, then that is called as investment. Therefore here you will find investment. Which investment? We are writing that in a non-current category, non-current, therefore that will become non-current investment, or you can say long-term investment. In schedule 3 you will find what? Non-current word. Non-current, say investment. Then deferred tax liability, here we are having on the liability side, we are writing this on the asset side, same item, but we cannot write as it is. Yes, some opposite word, opposite name we require. Now deferred tax liability, opposite to that what is? Deferred tax assets, we can say. There are deferred tax liabilities, opposite to that you can write on the asset side deferred tax assets, correct. Then here we have important word, what is that? Other. For other we don't have opposite word, therefore they thought if opposite word is not there, then can we write oppositely like this? that means third atom at a fourth place and fourth atom at a third place. Yes, we can do so. They wanted to write in a some ways, correct, opposite atom. Therefore what they did, instead of writing third at a third place, they have written third atom at a fourth place. Yes, you can do so. Now other, therefore here at a fourth place, fourth atom of the non-current, we can say other long term assets or other non-current assets. You will find other non-current asset, but both are one and the same. And then what about the long-term provision? Provision means what? Provision means outstanding only, expenses of this year, but we haven't yet paid. We have just provided that in the books of accounts. Correct. We are in a process of paying them. Correct. We are going to pay that in the next year. That is the provision. That means provision means, in other word, outstanding, we can say. Means provision means the outstanding. And opposite to outstanding is what? Prepaid. And what we mean by prepaid? Prepaid means the next year's money which we have paid in this year only. Correct. Next year's money we have paid in this year. That means what? That is advance. We have given them advance. From that, from this provision, you will get the opposite word, that is advance. Yes, with advance we will write loans and advances. Now what then? Here long term provisions, opposite to that you will find what? Here on the asset side, long term, because we are writing under non-current, therefore long term loans and advances. Long term loans and advances. And what about the current? Here we will find 6 subcategories, but no need to remember. As like liability side, just we have copied 4 of a non-current in a current, copy 4 of a non-current from asset in a current asset category. Then what to copy and where to copy, that matters, because here we have 6, not the only 4. What we'll do, we'll write 1, 2, 3, 4, 5 and 6 subcategories. Do one thing to make it fair presentation, nice presentation. What do? We leave one line in between 2 categories. Therefore do one thing, you also leave one line. Now first write what? Investment, as it is, na? Here borrowing, here also borrowing. Therefore here investment, and then here next to in a current category again what? Investment. Therefore investment, which investment? Here in this category investment. But because we are writing investment in a current category, say current investment or short term investment, current investment. Then deferred tax, here we have taken T of a tax, correct na? T of a tax, and there we had written trade payable. Now we'll take that item as it is here, T of a tax, and we're going to write trade receivable. Understood? Then we have left here one line, then leave again one more line, and yes, from long term loans and advances, keep loans and advances as it is and write short term loan and advances, and after that we don't have any space to write 4th atom, obviously. Therefore we have to write at a last place here at the 6th place. Now what is that atom? In the non-current you will find other long-term assets. Therefore here what? Same atom, other short-term assets. What to write in between? Now here also you will find a particular flow. We do investment in what? In a business we do investment. Now assume that this is the manufacturing concern. We do investment and after that we get what? Finished goods. That means we get, in other word, inventories. Yes, we get inventories. And after getting that, we convert those, we sell those inventories, and then we what get the trade receivable, that means debtors. And we convert debtors by asking them to pay. They pay money and you get money, that means cash here, cash and cash equivalent. Correct? These are the 6 items. Like this you can remember the format. That means format is very simple, just you have to remember one sentence. Borrowing, tax, others, provision. From borrowing, yes, long term borrowings or short term borrowings. From tax, deferred tax liability or the trade payable. From other short term liabilities or other long term liabilities. And from provision, short term provision or long term provision. And similarly, opposite to borrowing, you will find what? Investment, current investment, non-current investment. Deferred tax liability, here deferred tax asset. Then from other, you cannot get the opposite word, therefore write that as a at 4th place. Therefore there what? Other long term assets or other non-current assets. And then what? From long term provision, from provision word we will find what? Advance word, opposite word. Opposite to provision, advance word. Therefore from that provision on the asset side we are going to write long term provisions, loans and long term loans and advances or short term loans and advances. So understood? This is the. And what about the current category? Same items, investment, then trade receivable, and then other category, and loans and advance category, etc. Same thing you will find. Current, no need to explain. In between just fill the fillers, that means inventory filler and cash equivalent filler. This is the format. After remembering this format, then next task, converting trial balance into tallied balance sheet. But in between, after these 2 formats, you will find notes. Which notes you must prepare? Regular notes. Don't waste time in reading problem, means is figuring out which notes to draw and which not to draw. Just draw all notes. Correct? We'll see. Yes. While drawing the notes, we'll see which one to draw and which one not to draw. Understood? Here I have given emphasis on non-current and current. Therefore you must understand, my dear student, what is non-current and what is non-current. What is non-current and what is current. For this we have one slide here. In your book you will find 4 criteria. If you satisfy any one of following criteria, then it is classified as a non-current. Okay. Now which 4 criteria they have given? Operating cycle criteria, settlement criteria, trading criteria, and unconditional right criteria. Out of 4, you know one. What is that? The settlement criteria. What is that settlement criteria? If the settlement period is more than 12 months, then you can say that as a long term or non-current. If satisfied, if that period, yes, is what? More than 12 months, expected to settle in 12 months after the reporting date, then it is called as the non-current. Here if you want to study in detail in a regular class, I already explained what is reporting date and all. Correct? Then only this criteria we don't have. If this criteria doesn't satisfy, then what? Then you must check for trading criteria. If that satisfy, what they said, any one of 4. If your asset satisfies trading criteria, then also if without satisfying settlement criteria, you can say that as a non-current asset. What this trading criteria? If you are holding asset primarily for trading purpose, then that becomes your current asset. Yes. If you are holding for a trading purpose, then that will become current. If not, then that will become non-current. Okay, this is the trading criteria. Then operating criteria, if your atom satisfies the operating cycle criteria, if your atom is in normal operating cycle of a company, then that is called as the current asset, otherwise that will become non-current. Generally debtor satisfies this criteria. Okay, if your money is receivable more than 12 months, and that is the normal operating cycle of the company. Normal operating cycle, let's say 15 months. If your debtor is not paying within 12 months, then you cannot say debtors as a what? Non-current assets. Still we say debtors as a current asset, because this is the part of the operating cycle. In some companies you will find more than 12 months operating cycle. Operating cycle means what actually? This is the cash to cash cycle. Cash to cash, we'll say. We invest cash in business. Investing cash, you produce goods, then that means you get the inventory. Then we convert that inventory into what? Trade receivables. We sell the goods, and by selling you get money, and again we invest that money. That means from money to money. Correct. The period, this criteria, operating cycle starts with the procurement of raw material and ends with realization of the cash from debtors. Understood? If your particular atom is in between operating cycle, then that is called as the current, otherwise that will become non-current. And then unconditional right. Unconditional right criteria, if you don't have, if no restrictions are there on a particular atom, that means 12 months restriction, what they are saying, unconditional right to deferment. If you are having unconditional right to defer, that means if you can defer it, yes, if you have right to defer at least for 12 months after reporting date, yes, then that will become what? Non-current. If you don't have deferment right, then that can be current, that will become current. If you have that right, that means if you can defer more than 12 months, then we can say that as a non-current, because here we have got the right and we have deferred also by taking benefit of that right. If this is so, then that will become, after getting that right, that could become non-current, otherwise that is what? Current. Understood? Same criteria you will find on the asset side for assets and liabilities. Okay. Then here what they are saying, they have given operating cycle. What it mean by this operating cycle means the lead time to acquire raw material plus holding raw material plus time required for work in progress, finished goods, and then receivable collection period, etc. Correct? Now then classification, some points related to that they have given, and then format. Your regular format, this is the format of schedule 3, actual format, look like as like this. Here you will find first revenue from operation, then in that other income, then total revenue, expenses, CPCD, like this, the total, then profit before exceptional and extraordinary items, then exceptional items, continuing discontinuation, also you will find is discontinuing operation. Correct. First, all these are related to the continuing operation. So many confusions, and then detailed format here you will find, but at SY level no need to remember this. This you can read obviously. Then we have what? Notes related to managerial remuneration, then divisible profit and all, but we'll see once we solve one problem on a final account. Yes, if I teach you everything here in a detail, and then if I bring every complications here in this lecture, then you will find this lecture boring. Therefore, what we'll do with this knowledge, we'll solve one simple problem, and then after that, my dear students, we will understand remaining theory. Okay, thank you.